The following is a presentation of TFNN. Live at TFNN, the Power Trading Hour, with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to another exciting edition of the Power Trading Hour with me, your humble, lovable, and squeezably soft host, once again into the breach, dear friends. And we have another day that's very interesting, wrapping up. I guess it is the Chinese curse to live in interesting times, and boy, do we. And we'll talk more about it, but 8.5% in a broad index of China tells you just about everything, except the reaction on this side of the pond to that. And I think we can explain it a little bit, but I think it's all deja vu over again. But I'll try to get to that in a very short minute or two. Of course, as we start off the show, we always like to check out and see what volume and market action's like. We're off basically 10 points on the S&P cash, 2.26 billion shares. So volume is on the gooder side, not on the lean side. But we were down to 2063. It looks to me like at least some of the stocks may have found a floor in energy. And I don't know if this is just for a few days or anything bigger. I don't see any evidence that's anything longer, other than a lot of people are down to levels that they're starting to kind of pick at the stocks. That's keeping them from going down. Of course, we've got the FOMC meeting. We've got a lot of other news coming out this week. We've got earnings coming out the wazoo. And, I got to get that clip. Got to find it. A lot of people probably don't remember it, but there were a bunch of wild ads in 1999 and 2000, specifically on CNBC. But there were a couple of them that were rather famous. One of them was this young kid who was about 25 with a 70-year-old retired lady, and he had to rub her bunions at her bidding. It was kind of creepy, but the idea was that you probably should be trading stocks, or you'll be rubbing a old lady's bunions when you were 25. Another one was a guy that was a tow truck driver that somehow they were talking about an island, and he says, "Yeah, I bought an island." And of course, it was E-Trade or something like that. But one of the best ones out there, of course, had to do with the subject I'm talking about. And I'm going to go find that out here. But a lot of none of those ads are like that today, because they were such pie in the sky that you knew a bubble was in. They were running ads that were just ridiculous. And the market just doesn't give money out like that, but the ads really inferred that yes, the market did. It was your check to incredible fortunes if you would just sign up for E-Trade. What's the overseas call-in number? Don't know. Anyway. Yeah, we're off 10 points on the S&P cash. Hard to say. We're off 46 on the NASDAQ, and, of course, off 126 on the Dow, which it's kind of like that show. I don't know if you've seen it, but it's What's My Line? They say where the points don't count. And to me, it's just like the Dow. Just doesn't count. The only time it counts is when there's a huge move, because all the rubes out there listen to the news at 5:30 or 6 o'clock at night, and they hear the Dow Jones went up 500 points. They heard it went down 500 points. Then they pay attention. But a real index like the NASDAQ or the S&P, It moves 10, 15 points. We need big scores for little American heads to get involved in the stock market. But again, I digress. Digress? I'm digressing. And I need to go more on a tangential endeavor from here. But we'll start the show now.
That it's all just a little bit of history repeating.
In 1866, 2 weeks after setting out from Valentia, Ireland, with 2,700 nautical miles of steel cable wrapped around giant spools in her cargo hold, the great eastern beaches, Trinity Bay, Newfoundland, the transatlantic cable has been successfully laid across the ocean floor, enabling telegraph messages to shoot instantly from the U.S. to Europe. Before then, it took anywhere from 2 to 3 weeks for news to move from one side of the pond to the next. Guess what happened instantly after that? You got it. It was flash trading, because literally you could trade within 30 minutes of when you got information for trading between cotton, everything else. But basically that there was a lot of traffic on it, but finance was one of the biggest things that paid for that transatlantic cable. But of course, it was busy from then on. And of course, when it went out, it was always a horrific end. It's like the internet goes out 10 minutes now, and people are like on a heroin binge with a monkey on their back. I need to get me some internet now. We got to go out west to get some internet. The internet's all dried up. And if you haven't seen that South Park episode, it's pretty weak. Wonderful, actually. But on this day in history, we actually had decent communications across the pond. Other things of interest out here. I saw this article last week, and I'll just read it to you. About 20% of S&P companies have reduced their share count by at least 4% over the year-over-year in each of the 5 last quarters, and that appears to be continuing into Q2. As of Tuesday night, 92 companies in the S&P 500 have reported Q2 earnings. 20 have reduced their share count by at least 4% year-over-year again. That means earnings per share is 4% higher and PE is 4% lower than a year ago for those companies. And of course, he's saying that the companies are actually, the amount of shares are shrinking, but the news is not always what it is reported to be. What they haven't said is there are all these new companies. And what the new companies are doing, of course, is taking lots of money in. Those shares are available for sale after 3 or 6 months on IPOs. And do we have more shares of companies now or less shares? The answer is a great deal more shares. Just some stocks have less shares, pushing their PEs higher, even though their earnings have not changed whatsoever. So if there's less shares, theoretically, it should be worth more. But they're not taking those shares and burning them in a big pit out back, or having a big barbecue with ants and checkered tablecloths and lemonade and throwing them all in a bonfire. Those are, for the most part, going back to people in the company. So the idea that these shares are, quote, quote, going away, or share buybacks, or a net 100% loss to the float, probably a little overstated. And of course, this came from the New York Stock Exchange, and so they don't have any irons in the fire on this one, do they? Huh. Anyway, I thought it was a little disingenuous. At the same time, they put out a factoid that actually is worth knowing, and that is we continue to see stocks have less and less shares, but more and more stocks as IPOs continue to go rampant. In fact, we had another one, I think, price out today. Anyway, that's pretty much all the news, because, of course, we want to get into China news. And let's just go through how the European markets and everything fared out here. I do have that. Of course, more importantly, it is the Asian markets. I was up probably about 2 o'clock in the morning walking the dogs, because Mr. Diablo is, I want to change his name to Liberace because he's the pianist. But he's got a very small bladder. And he woke me up, said, Daddy, I got to go. So I flipped on Bloomberg while I was going out the door, came back in, started seeing China fall over, went and grabbed the mouse as quick as I could and sold some ES futures and made a little extra cash. But I am tired, and I will probably be going to sleep at about 4 o'clock today and take at least a little nap and get back into the swing of things. But made a little extra ill-gotten gains because of the small bladder size of my puppy, Mr. Diablo, El Diablo, actually. But started looking at these. Nikkei was off only 1%. Shanghai, of course, 8.5%. Hang Seng off 3%. And I will again continue to say,
I informed you thusly.
Months ago, as we talked about all the problems with these China stocks, kind of interesting that even though they have the ability to manipulate the stock market, they were still not bigger than the stock market, and they finally had to let it snap. Now, remember, still, what, 54% of the shares are not trading in some of these countries. So just what's going to happen when the rest of those open up, which is probably more interesting to me than what is happening today. Of course, when you looked at the EU, they started to see a little bit, but even the DAX was off 2.5%. FTSE was off 1%, and the CAC was off 2.5%. So when we see a lot of this going on out here, it is problematic to think that we've seen all that can happen badly here. I was going to tell you about my theory. My theory is that what we are seeing to some extent is people sell out of the more volatile places, try to buy the dollars to come here to the United States and put their money in the bank, in the market. But two, they've already done that once. And now the question is, with the markets in the U.S. going down, are they just going to go to the mattresses? Oh, I love that Godfather movie. Isn't it great? We got to go to the mattresses. Anyway, maybe that money is just going to find its way into mattresses. Maybe a little bit of it's going to find its way into other things. But there's a couple of things going on. One, the Fed, Treasury, the central bankers are not going to go quietly into that good night. They are doing everything they can to conjigger with exchange rates on it. It's just hard for me to believe that the moves that we're seeing in the dollar and other indexes, currency indexes out here, would happen at the rate that they're happening without huge amounts of intervention by these folks. Right now, I suspect they're trying to keep the dollar down, but you can't keep a good dollar down, can you? I don't think so. The mighty dollar, of course, off 75 cents today, but I think that was a lot of push into this market. 96.49 for the dollar index. But I think we could see a little bit of a pop, but I think we're in a selling mood. They ain't over yet. We'll be back in a minute.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
There's a few things out here that are kind of disturbing me in the market. This is one of them. We've been trading the EDZ in our daily newsletter, The Path of Least Resistance, which you can check out on the front page of the TFNN website under newsletters. But we bought this thing, I think, the first time down there in the 24s or so. And anyway, we've been playing this one actually for a while. I think we played it on the upside from back in September. And I don't know. I've been in this thing about 4 or 5 times now. And it's been a little cash machine for us. Every time I think China is going to do a yuck fest and blow some chunks, I'm in this EDZ, and it's traded well, especially since it pretty much has all the downside and none of the upside of the China markets, at least too much. But we bought this again just a couple of days ago for better than 34, and we're out again this morning out here. Volume's a little light, and that's what makes me think that maybe commodities are real close to making maybe a little bit of a sideways move before they move lower, or maybe even do an ABC down. So you may be a little bit more out here. But of course, emerging markets are all about commodities. They don't have any high-tech businesses. And emerging markets, no, they're all about the coffee and the cocoa and alcohol for fuel and all kinds of weird stuff. But tomatoes, It's all about commodities. And I just didn't like the way this thing opened up on very light volume. It still has very light volume today. And normally has a fairly good way of telling what those commodity stocks will do. I just don't like that it went over this previous spike. And of course, we had a good $6 in this thing, so we went ahead and took the bread this morning. And you know, it's $6, pretty quick trades out here in a lot of these things. But it is, I don't know what else you can say about it. Just gives me a little pause, and I think maybe that pause may be just for the next few days. Of course, we've got the FOMC meeting. We also have something else, which of course is on Wednesday. We're going to start getting where we've had mostly the S&P 500 stocks so far. We are now going into a deal where we're going to have a lot of the smaller stocks in the Russell 2000, and those are going to start hitting like a hurricane come Wednesday. And after the bell, and Wednesday and Thursday, there are a ton of them I saw. Now, are they going to move the market by themselves? They aren't, but they certainly are going to move the IWM. And why everybody thinks that the idea, everybody's stopped working here. What do we got? Got to play my own intermission music here. Let's go to the IWM. If I can type right, IWM. Nope. We got problems right here in River City. Looks like I'm going to be rebooting my machine during the break if our engineer is listening. And we'll be figuring out about that. But I had a new update, and I think it's causing problems on this machine. So we will have to do it very quickly. Yeah, I know. Just a minute and a half to break. So we're just going to talk about other things in the meantime. But I don't want any uppity talk about not having a chart up. Anyway, it is what it is. Well, let's look at these indexes again. I was going to say the IWM's all about, of course, these small stocks. And it is, I don't know if you can say anything about it. I wanted to look at that IWM out here. But, I mean, it's kind of busting against these low range. And I think maybe we've got temporary support. I don't think it's long-term support. But, again, there's this theory, or the theory's been espoused, that these small companies don't export near as much as the big Fortune 500 companies. Therefore, any kind of rate increase is going to be tough. And the problem is that it's going to be even tougher for these guys to get cash. The dollar index probably doesn't hurt them directly. What does hurt them directly is higher interest rates. And what are we trading out here? 120, yeah, 120.50, 120.53 on that. We're up 27 cents on the IWM, and it really hasn't blown through these lows. But my guess is that we're probably going to start seeing that weakness come in on Wednesday, which is things kind of probably just jump the creek to the downside, my guess. And probably just in a bigger trading range, I think, from 104 up to this 127. And we could be in this trading range for a while. But 104 would not be out of the question. And that's where we bought a lot of those calls during that week, I think last fall. Anyway, we'll be back in a minute after I reboot, get everything restarted.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
If you're looking for a great opportunity to diversify your financial portfolio, consider the Principal Protected Market Safe CD from Everbank. They've just released the second running of their 5-year Market Safe Power Metal CD, which combines the power of gold, silver, and copper. You get exposure to 3 valuable metals in one index CD and have the potential to earn up to 45% capped upside payment at maturity if the metals increase in value across annual pricing dates. And should they decrease? No worries. There's zero risk to your deposited principal here, as you still get 100% of it back. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on the CD. Intrigued yet? The August 17th funding deadline is quickly approaching. So hurry over to everbank.com/TFNN-CD for more information, including important product details and disclosures. Once again, that's everbank.com/TFNN-CD. Everbank is a member FDIC.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
If you're looking for a great opportunity to diversify your financial portfolio, consider the Principal Protected Market Safe CD from Everbank. They've just released the second running of their 5-year Market Safe Power Metal CD, which combines the power of gold, silver, and copper. You get exposure to 3 valuable metals in one index CD and have the potential to earn up to 45% capped upside payment at maturity if the metals increase in value across annual pricing dates. And should they decrease? No worries. There's zero risk to your deposited principal here, as you still get 100% of it back. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on the CD. Intrigued yet? The August 17th funding deadline is quickly approaching. So hurry over to everbank.com/TFNN-CD for more information, including important product details and disclosures. Once again, that's everbank.com/TFNN-CD. Everbank is a member FDIC.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we're back. I had to reboot my machine, but even just rebooting it didn't work. I had to take it all the way down and leave it off for 30 seconds and bring it back. It was one of those horrible ones, but I get so few of them. But I've gotten 2 in the last day, so there's probably something going on with my machine. I'm going to have to check it out. But I'm trying to get everything back up and running. And at least my quotes are back up. And then we can look at everything else. I'm almost back. And there. Okay, well, we're close enough anyway. So we were talking about IWM. I wanted to look at it. And, of course, it's down here with some, you had some pretty big volume. And I don't know if the volume's right on this. And maybe the volume's low on everything that I'm looking at. Maybe the quote system's off today or something. But so far, not seeing a lot of what's out there in volume. But we'll continue to keep an eye on it at the end. When we go back to the big indexes, certainly the volume is there, at least so far, for lower prices. We're at 2.5 billion shares already and off 10 points in the S&P cash. The real question is, how does this market close today? And my guess is that we're probably going to play around until that FOMC announcement, and then we're headed back down again. We lightened up a little bit in the daily newsletter just because I saw some things that I didn't like. The market really should have just kind of cracked here today and did not. Let's look at some of the stocks that I've been looking at. And, of course, there goes everything once again. So I don't know if it's this new driver for my video card, but my guess is that's what it is. I may have to roll it back. Yes, the software gods have decided to chase me around today. So I guess I'm just going to talk for a while. They can let me know when the break comes. But that's it. There's just not a lot for me to do here. Everything just blew up once again. I'll try it again, but I'm pretty sure that's it. What else do we have out here? Well, it's working. Okay. I thought maybe something else had been going on. Maybe it's just giving me a hard time. Maybe it doesn't like everything going on. Yeah. I'm back from death. I thought, I'd have to reboot once again. Anyway, looking at these charts, there's a few out here that really are starting to interest me. These energy stocks certainly look like at least the more interesting ones of them are down here on fairly light volume. Eagle Rock Partners, a big natural gas play. I think we brought this up Thursday or Friday. It's kind of interesting is it's against its December 26th low, $1.78, 8.5 million shares. Got into it Friday with 4.3 million shares today. Again, I'm thinking maybe there's some problems with the data feed because everything that I'm getting today, the volume is way too light. And let me see. Maybe I can just go try something else, EROC. No, I got it on two different systems. So I don't think that volume is right, though. But we'll look at tonight and see how it works. But certainly on Friday, we had that volume. Maybe somebody in the den has volume today on EROC different than what I show. But what can you say? Anyway, there's some of these stocks making some light volume moves out here. Not a bad looking candle out here. And if you're looking for penny stocks in the natural gas field, Energy Rock Partners, probably not that bad. It is one of those MLPs, and that's what I warned you about last week in the fact that the IRS is changing its way that it collects taxes from those, and there may not be any coming back from the grave for those, so keep an eye on them. Oh, boy. Okay. I have a problem, and I don't know what it is. We'll continue going. GOLD out here. It, of course, got into this low. It's a little lower out here today, Randgold Resources. Everybody was expecting some kind of big bottom out of this weekend once they saw the numbers on the commitment of traders, and they all thought that that instantly meant a bottom. Probably only means worse, and that is that there are more contracts out there to push out of the way, at least in the meantime. Andy Heck has a very interesting article on gold with a very clickbaity title today. You may want to check those out. Other things of interest, you know, if you look at more of these gold stocks, I just don't see a great deal of, let's go, let me pull up my gold quote here just to make sure. I'm now worried about everything because, of course, you get a computer that starts crashing. Okay, 1094. So, what can you say? Silver up a little. Copper. Copper is the one that's really bothering me, and I think probably bothering everybody. It's down about 3 cents again today. It looks like that $2.25 level is what copper is going after. And what else can you say? Anyway, back to these golds out here. I still, like I told everybody last week, I got some emails today that ask about what I thought about now. And there still doesn't seem to be any case to be had for a V bottom in these gold equities. They just, especially these last legs, came down on far too much energy, which would, at best, these things go sideways and consolidate for a while before they head higher. I don't know if anybody's actually looking for that now. Some other ones out here, and we had a few pharmaceutical stocks that look like maybe they're starting to find a little bit of support. Infinity Pharmaceuticals, INFI, is one of those. It is back down to the May 9th, 2014 lows at 840. Got to 842 today. And again, all these volumes look suspect to me, so I will worry about those later. What else was out there that was very interesting? I think somebody mentioned SPLK. And, okay. SPLK. And I was kind of wondering what this one's going to do. It certainly looked like a short opportunity. I think someone brought it up in the den. February 27th, this had $74.88. Got into it on Friday with 6.3 million shares. And again, kind of down on a light volume here. as far as what I'm showing. I don't know what the real volume is. It looks like all of them are 1 digit off. What would that be if it was 1 digit up? 10 million shares. Wonder if it has 10 million shares. But it is interesting. If you're not familiar with Splunk, it is a data mining company. And of course, Splunkers are people that go in there and wander around caves and stuff. I guess you don't want to be claustrophobic doing that. But of course, this data mining company, the energy down compared to the energy up in the last leg wasn't all that exciting. We continue to see some weakness in some of those. But, you know, it's just the volume on Friday probably had to give you a good indication. You did go, of course, through those two previous highs, the last one with 28 million shares, and I think that continues to tell you that everything is problematic. 10-year yield is off yet a little bit more, which is really surprising to me. I thought maybe we get this bounce out of the bond today. Let's take a quick look at TLT. We had a caller on that. And of course, nothing's going to be easy, is it? They're going to make me pay for every minute of this show today. TLT. There we go. Yeah. I don't know if you can say a great deal out here. Well, since I can't trust the volume now, 34 million on Friday, which is pretty decent out here, but kind of a wimpy move, at least price move yet today. So that is problematic. To SPL, TFM, TSM, Taiwan Semiconductor is another one out here that I find very interesting in the semi space. A little doji out here today, but it still looks like this thing wants to come back and at least test the 20 and 60 cent low from January 16th. Oh, here's why. There we go. Everything looked weird for me. And of course, nothing exciting happens without everything blowing up all the time. We will continue to persevere, even though apparently the black helicopters are trying to keep me off and getting any of this stuff done. Taiwan Semiconductor. There we go. Okay. Now, finally, you have it. This is what I was looking at for the Taiwan Semiconductor. This nice, big, huge gap that comes up from the 15th of January with 36 million shares. We got into that with a whole lot less on Friday. I think it was about 12 million shares, 15 million shares. We'll figure out how much we have left out here today, but got to say 36 million shares. Maybe these semis also have found a little bit of sand beneath their keel before they totally sink out here. But again, I've seen so many stocks over the last few weeks. One of the reasons why we were short was so many of those energy stocks went to the bottom with very light volume and continued down, even though they should have stopped with fairly decent support. It continues. I don't see a whole lot out there that says that anything should change that. When we look at oil, you know, we're off another 81 cents today on crude, on Brent.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry, powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
And we've got Grubhub out here back chasing its lows from July 2nd. What are we, 4 cents shy of that July 2nd low today? Fairly decent volume, so you're probably going to want to watch how this thing closes out here today. But, you know, should be some fairly significant support in this range. And I don't know what else you can say. Grubhub, of course, one of these newer IPOs that has not been around that long. But, you know, somewhere at $30, it looks like there have been buyers before. I just don't like the long-term charts on these. The energy is about the same up on the way down. So do we get a bounce out of this? You could, but boy, that volume really is starting to look weird. XLE is out here today, and on a longer term, this thing is going back to a gap it had a long time ago. That gap was from, what is that right there? A gap up was on June or July 26, 2012, which gives you an idea just how far the destruction has gone in the XLE. Pretty nice ABCs on the way down. You could say that this would probably be a logical place for it to at least maybe even go sideways out here. Of course, we've got a market that's almost, you could almost consider it a fast market, and it's going to be very tough for me to see that. Volume was 14 million on that gap up, and of course we got about 11 million out here on the way down. So if it busts that, the next gap and swing point take you to about $61. So you want to keep an eye out for those. See if there's anything else out here. Another company that's being slaughtered today to the stock gods is RARE, Rare. It's another pharmaceutical company. Now, again, we've been talking about these stocks doing the 3x3 that are parabolic, and certainly this is one of them. This one's broke hard. You know, it's tough to get these things right off the top, but what you would look for this one to do is hopefully go back over the 9-day moving average where you could pull the trigger on this thing, or the 3x3 displaced moving average, but I wouldn't chase it down at the moment. But if you get lucky, maybe this thing comes back up, maybe it's 120, maybe you have to ride this 3 days for it, bounce back up and get above the 9-day, where then you pull the trigger and let this thing go back down. But to me, it looks like this thing's got 100 written all over it in this consolidation range that started, June 25th. So you got quite a lot of time out here for this to go back. I don't know if if at 120, you got about a 20% move in that. Yeah, other than that, it's kind of tough to figure this one out. See if there's anything else out here wanted to get to. Had a email that before everything started blowing up here that I wanted to get to for the end of the day. And it's just a little parable, but someone was talking about bad ticks in their data. And I responded to the gentleman and said, hey, sometimes they actually put bad ticks or slightly bad ticks in data out there so they can figure out who's using their data and where it comes from. It's an old practice. There's actually a movie out this week called Paper Towns, where on maps, everybody was copying maps. We think piracy is just something that happened now, but it's not. It's been around for a long time. They used to put false towns on maps and see who copied them to go after them for copyright infringement. So there's nothing new under the sun. We'll monkey with stuff for that. In the meantime, hang on for Tom O'Brien. He is back and rested and ready to go. See you tomorrow. Same bat channel, same bat time. So when you can, not when you have to.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.